Chinese startup DeepSeek's AI breakthrough caused a panic in markets yesterday and had many expecting this to burst the AI bubble. Today, we dive into the effects of a massive deflationary collapse that could take the entire global economic system down, and what it means for the world's only deflationary money in Bitcoin. Chinese AI startup DeepSeek came out firing early Monday morning, announcing their new AI model that was trained at a fraction of the cost of reigning competitor OpenAI. This quickly caused some panic in the markets as major tech stocks like Nvidia saw massive drawdowns. Nvidia declined nearly 20% on the announcement as fears of competitive pressure that DeepSeek's efficient and cost-effective model places on the world's leading AI chip manufacturer and other AI companies. What DeepSeek is more broadly exposing, though, is just how overvalued US tech stocks are. Being on the eve of an AI and robotics revolution, the last few years, US equities, mostly in the form of large tech companies, seem like the best game in town from an investor standpoint. But if Chinese companies can produce competing innovation at a fraction of the cost, what does that say about US tech valuations? We are clearly headed into an era of unprecedented technological innovation that stands to disrupt just about everything in the global economy. And as we saw hinted at yesterday, businesses that look like sure winners one day will end up being disrupted overnight. This is eerily similar to what occurred in the internet wave in the late 90s and early 2000s. The bursting of the dot-com bubble saw a huge amount of overvalued companies collapse in an instant. Just like the dot-com bubble, the AI bubble will likely see many tech companies collapse and be swallowed up by superior companies using more advanced technology in the blink of an eye. This AI innovation shock should serve as a wake-up call to anyone who is planning on storing their wealth in equities over the next decade. Bet on the wrong company or country and lose everything. This is why Bitcoin is poised to be the biggest winner in this current technological wave, where deflation will put more and more pressure on our inflationary credit-based economic system. You see, Bitcoin solves the age-old problem of where to store your wealth in an increasingly deflationary world through exponentially advancing technology. Jeff Booth lays out this thesis succinctly in his book, The Price of Tomorrow, and it's coming true before our very eyes. If you haven't read Booth's book yet, I highly recommend it. It came out 5 years ago, but he was so ahead of the curve that it almost reads like prophecy today. His main thesis, for those that have not read it, is that technology is advancing so rapidly that it creates deflation, making things cheaper and more efficient over time. However, our current economic system is built on inflation, requiring constant money printing and debt to sustain growth. This creates a clash. While technology should make life better and more affordable, the system fights against it, leading to inequality and instability. In the book, Booth suggests embracing deflation as a natural and positive outcome of progress. This concept is not an easy one to wrap our heads around, since we're viewing it through our current inflationary system. In his latest masterclass interview with Natalie Burnell, Booth talked about why this concept is so hard for us to grasp by giving a very salient example of AI and robotics.
So you've had people come to you and it's like they read the book, they love it, they find it to be fantastic, but they kind of need you to explain the lesson over and over again because it's so contrarian to this system that has inflation baked in the cake. Like, why is it so hard for us to understand this?
So there's actually virtually no one I know that hasn't gone through the same process, including, so think of somebody like Luke Groman. Like, he's brilliant, brilliant. And he came up to Vancouver and I introduced him to one of the top AI general intelligence companies, robotics companies. And he was talking at the time about the productivity growth miracle that AI was going to drive, and how that would help solve the debt. And I looked at him and I said, productivity growth is faster deflation. That's the key driver of the debt. The exponential rise in credit is to stop, and then the manipulation of that money is to stop the deflation, because a credit-based system cannot allow deflation. And so even Luke at that time, now Luke now totally understands this, but I don't know anybody, including myself, went through that process, who didn't grapple with some of these concepts because they're so different than anything we've ever lived with.
Many get wrapped up in the boom to productivity the AI revolution will bring, but so many aren't seeing how this directly and violently clashes with our current inflationary debt-based system. As AI and robotics cause a massive boom in productivity that makes all of our lives easier and cheaper via deflation, our inflationary monetary system has to ramp up the currency debasement in order to combat that deflation, since the only way for an economy to grow in an inflationary debt-based system is more inflation. In other words, the system's reaction to this technological and productivity boom will be even more money printing. In this clip, Jeff explains the clash of inflation versus deflation and why we're so hell-bent on inflation being the only way to economic growth.
So how did they convince? I mean, literally, this is what all the academic books about economics teach. It's like a little bit of inflation is healthy. They have a target rate of 2%. It allows for more flexibility. It allows for stability and growth. Like, how did we get it so backwards?
So because a credit-based system has to have inflation to grow, and the credit-based system is insolvent. So if the credit-based system allows, why nobody talks about this is from a credit-based system, they are right. And if your entire world structure is a credit-based system, then it requires higher and higher rates of inflation to stay solvent, or a wipeout and a collapse, a deflationary spiral, a collapse and a restart. But if everything was wiped out by that, every single asset, every single work, trade, supply chains, grocery stores, every single thing would collapse.
Right.
And so the fear of that collapse has people so scared of that collapse and so unwilling to look at a different type of solution that they're inside this system telling them, I'm saving the world, I need to do this. Otherwise, those stupid people, those poor people will starve to death. When they're actually creating the same problem. And you have 7.5 billion people on this planet literally living in modern day slavery, unaware that they're living in modern day slavery from this same system. And so take 7.5 billion people out of modern day slavery and add them to the free market where their minds and can create value for us too. And you'll have a faster rate of deflation. You'll have a faster rate of abundance for everybody.
As Jeff says, in our current monetary system, if deflation through technology is allowed to go on too long, it can cause catastrophic collapse of the entire debt-based system itself. Jeff also talks about how Bitcoin is imposing a free market force on the entire world. And as long as it remains decentralized and secure, there's nothing anyone can do to stop it. So not only is Bitcoin the solution to this spiraling debt-based monetary system we are trapped in today, it's also the solution to the store of value problem we talked about earlier. Bitcoin will not change. Bitcoin will not be disrupted. It cannot be seized or debased. In a time of rapid change via technology, Bitcoin's boring predictability is its greatest strength. It's got a locked-in finite supply, a new block is produced approximately every 10 minutes, and its unmatched security is tied to real-world energy expenditure that cannot be replicated or faked. Thanks to Satoshi and Bitcoin, we no longer have to fear the natural deflationary forces of the free market through technology. So let companies innovate rapidly and drop prices for everyone around the world. This is something that should be celebrated and not feared. Don't get caught in our system of fear. Embrace the fair, equitable, and incorruptible system in Bitcoin. Work hard, save in Bitcoin, and celebrate the ways in which technology will continue to make our lives cheaper and easier. And you can embrace this new system of abundance with services like Swan. Visit swan.com or download the app by searching Swan Bitcoin in the App Store. Swan has the fastest and easiest onboarding experience in the industry. You go from sign up to purchasing real Bitcoin within minutes. And if you already have a healthy stack of Bitcoin in self-custody and want to upgrade your security, then Swan Vault is for you. Swan Vault is a multi-signature custody solution where you vastly improve your security from loss or theft without sacrificing sovereignty. Visit swan.com/vault to learn more. And finally, a quick shout out to Mara, the largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. Now, since we're in the middle of a Bitcoin bull market, lots of noise is circulating about alternate coins. So I wanted to leave you with this fire post from Corey Bates. Vitalik doesn't buy Ethereum. He only sells it. Ripple doesn't buy XRP. They only sell it. The US doesn't buy USD. They only print it. There can only be one Bitcoin. Wake up. This post perfectly and succinctly spells out what separates Bitcoin from all the other crypto projects out there. They are all recreating the fiat system. Bitcoin, on the other hand, upends the entire monopoly board and starts a new and more fair game for everyone. That's it for today. I'd love to hear your thoughts, so please leave them in the comments below. Like this video, share it with friends, and of course, subscribe to the channel for more high signal Bitcoin content. Thanks for watching, and remember, TikTok next block.